Good afternoon and welcome to another edition of the EPS series on business and banking dialogue online talk show. Today our topic is commercial viability. My name is KK and I am the host for today's show. Please join me in welcoming Mr. Mihir Gandhi, partner and leader payments transformation in PwC Mumbai. Mr. Gandhi, welcome to the show, which is live across EPS platform, YouTube. Thank you. EPS platform, YouTube, Facebook, and Twitter. We have been getting a lot of participations from these social media channels, testifying the popularity of this show. Mr. Gandhi has more than 16 years of consulting experience in the areas of strategy, market assessment studies, business plan, operational and process improvement, due diligence, technology consulting, and implementation support for clients primarily in the banking and financial services industry across India, Middle East, and Africa. The specialties are payment industry, fintech, for which we're going to talk to him today, financial services, just a minute. Yeah. Innovation, business development for consulting. Good afternoon, Mihir.
Good afternoon. It's a pleasure to be on the show, and I'm very excited to speak on the different areas for today's topic.
Okay. So this some technical issue, let me sort it out. Okay. So Mihir, you played a key role in the implementation of RuPay. So with a circulation of almost say 291 million cards, has the RuPay implementation met its expectation? If not, what needs to be done?
Sure. So thank you, everyone. And it's a great honor to be on the show and talk about the different topics. So thanks for the opportunity. Coming to the specific question that you asked, I think it's been a journey for RuPay. So when we helped NPCI to launch RuPay in 2011-12, we had a vision. But the vision was a step-up vision where it was an incremental build and not a big bang approach. And if we go back and see what has happened in the last few years and how RuPay acceptance has increased in the country, as well as internationally, people are more aware of RuPay as a domestic card scheme of India. I think it has really picked up, and the success is there for all of us to see. Specifically, debit cards was the first product which RuPay launched. And I think with the debit card portfolio increasing in banks, it has seen a good success. Today, as we speak, average of 30 to 35% of total cards issued in India are RuPay cards. Of that, maybe around 20 to 25% or 20 to 30% would be issued and would be active on different platforms today. Coming to the other products that RuPay had envisaged at that point of time, be it online acceptance, be it prepaid, be it credit cards, I think slowly there has been a journey towards that. And now credit card issuance in RuPay has also picked up, with a lot of banks actually contemplating and trying to issue credit cards for different segments of the customer population. So overall, I think RuPay has been a success. If we compare it to other domestic card schemes across the world, there are very few that have actually succeeded. So China Union Pay obviously is a dominant example of a success. Singapore has Nets, which has succeeded. Canada has got Interact, and India has RuPay. So all in all, I would like to say that yes, RuPay has been able to achieve what we set out for in 2011-12. There is still a lot more to be done, and I'm sure the NPCI and the other entities will be working towards that and supporting to achieve those milestones.
Excellent. So RuPay has also gone international, right? I think Saudi Arabia and other places. So which are the places that countries that have adopted RuPay as one of its payment mechanisms?
So what happened was there was a tie-up before I think a year where RuPay decided to go international. I think Bahrain and UAE were two countries in the Middle East where it said that we will accept RuPay cards, and there was a mutual agreement for that. Besides that, what RuPay has done very intelligently is it has tied up with Discover and other international card schemes so that the acceptance of RuPay card in international locations is there, and it is used by all the merchants as well as at ATMs it can be used. So besides these two countries, what it already did was to ensure a global acceptance. It tied up with Discover, it tied up with JCB, and it also in process of tying up with other international card schemes.
Excellent. So just briefly, you also are involved in the product development of BBPS and perhaps its implementation. How is that going?
So Bharat Bill Payment System was conceptualized, I think, in 2016, and the whole idea was that is there a market for all bill payments to happen through a centralized channel? And I think there were a lot of aggregators, there were a lot of service providers on the payment side. There were a lot of banks that are actually enabling bill payments for different utilities, for different transactions through their own platforms. The idea was how to make it more interoperable, more open, and having a common infrastructure for processing such transactions. So with that in mind, we helped NPCI to draw up the overall kind of vision, the market plan for how BBPS as a platform should work. We looked at the different segments of billers that could potentially be onboarded in this platform. And then we started talking to the different operating units or the potential operating units. I would say since the time it started and the licensing has been provided to a lot of entities in India, including the various operating units, I think that it has seen a mixed success. There have been some wins, but there have been some also areas of improvement which need to be focused on. If we see in the last 6 months or last 4 to 6 months, I would say, the adoption of BBPS as a platform for bill payments has really increased, primarily maybe because of the lockdown due to the COVID situation. But if you see the numbers, so if you see the numbers from Jan till date, the BBPS numbers have really spiked up, and that is a clear indication where the economy and the customers in India want to go, that they want to focus on using digital payment modes and not going physically at a location or at any other outlet. And you may have also seen that a lot of these operating units, which are banks as well as third-party aggregators, are now offering different incentives, different schemes for all of us to pay all our bills digitally and not through a physical location or not through a traditional way that we used to do. So I think BBPS is currently in the phase where it is about to pick up and the transaction volumes are expected to spurt and grow very, very well. We've also been hearing in the news that there are some indications that NPCI may look at setting up a separate, kind of unit or entity for BBPS. So that is what we hear. But it is about to explode, is what my view is. And if the right push is there, the right focus is there, and all the operating units and banks come together, I think it can really surpass, other such platforms. To just give a context of what other international similar platforms exist. So there is a platform called as Sadad in Saudi Arabia, which offers a similar bill payment and bill presentment options to the different customers. There is a platform called as BPay in Australia, which also offers some features of what BBPS does, but to a reduced functionality. So all in all, I would say BBPS today in the world is a most comprehensive platform offering different services of bill fetch, bill presentment, and enables all the entities to come together and offer these services. In my view, if we play it right, I think there's a big potential, and a lot of countries will learn from us the same way they have been learning from us on UPI and the faster payments, as well as the other platforms that we've launched.
Thank you, Mihir. That's I just want to touch upon two very important payment systems of India, which you have been instrumental in bringing it in implementation, and that's they are really excellent payment systems, which has, I think, accelerated the adoption of digital payments. So, ladies and gentlemen, welcome to this show once again, and we have we are talking today on payments business commercial viability. No better person to talk to about it than Mr. Mihir Gandhi himself. As usual, you need to put your questions in the question and answer box, and we will try to get as many questions as possible to Mihir. So, Mihir, let's discuss on payments business in India focused on profitability. So, payments continue to be some of the most highly valued businesses in fintech. There's no doubt about it. Some important news, at least globally, over Visa's $5.3 billion acquisition of Plaid, and an IPO of $4 billion approximately of Bill.com, a B2B processor. And Forbes reported that payment startup across the globe attracted a funding of close to $15 billion. All very good signs for payment fintech companies, isn't it?
Correct. Absolutely.
So your thoughts on is that yeah.
So what I believe what is happening is first I'll talk global and then I'll talk about India, right? What is happening? So globally there are different countries, and each country has a different model for ensuring a commercial viability of payments, right? So for example, if you take the US economy, US economy is more of a card-based economy where every 3 out of 4 transactions happen through a card. And it could be a debit card, it could be a credit card. And the prices, which is the merchant discount rate, which you would normally charge to a merchant to accept the card, is one of the highest across the world. So in US, it could range anywhere between 3 to 5%, depending on what merchant, what relationship, what bank. And the interchange rates are also very, very high for Visa and MasterCard, what they define, which is paid from the acquirer to the issuer. So the point being that US as a market is very, very, open, and it is not taken a very, very strong view on regulating prices. It's more of a open market. So US consumers have to pay the price to use digital modes, and banks and other payment entities actually make a lot of money on payment products, right? Coming to other markets like Europe and coming furthermore to the East. So in Europe, it is a little bit different, where bank transfers and debit cards still account for 70 to 75%, or maybe even 80% of the total transactions that happen in Europe. The margins that are to be made are very, very small. It could be as low as 0.2 to 0.3% as an MDR for some of these transactions. If you come to China, China is dominated by 2 or 3 large players. It's more of a large closed loop model with Alipay and WeChat dominating 80 to 85% of the overall market. There also, they have priced themselves quite competitively compared to other schemes and compared to UnionPay, like they have charged even less than a percent, whereas UnionPay and other schemes would be charging 2 to 3% as a merchant discount. So all in all, what I'm trying to say is that each country behaves very, very differently. India is a very different country, the way we have evolved, the way we have grown. The opportunity to digitize payments in India is much higher because even today we are at maybe 80% of our transactions are still happening through cash, 75 to 80%. It has come down from where we were earlier, which is 90 to 92%. But now still there is a headway of at least 30 to 50%, which we believe will exist. There is a concept of cashless and there is a concept of less cash. India, I believe, will never become a cashless economy, at least till 2050. It will be a less cash economy. So when we say cashless economy, there are very few countries in the world, in Europe particularly, which have seen almost 100% digitization of their payment transactions through all payment modes. And India has still some room to go and some way to kind of catch up over there. So in India, I think the pricing has evolved. If you see what had happened 10 years back, if you look at banks, the kind of merchant discount rates they used to charge and the kind of ATM fees that they used to have earlier was far higher than what they actually have today. So as a trend in India, prices for payment products or usage both on the issuing side as well as the acquiring side has come down. It is driven by the regulators and the focus by different government entities and bodies which have pushed down some of these prices. It is good because in a way you are differentiating for services that you actually provide. If we look at another trend, there is another trend where credit cards and debit cards, the way they are treated are very, very different in India. Earlier, it was the same. The merchant discount rates, the pricing for usage of a debit card versus credit card was the same. But of late, in the last 4 to 5 years or 5 to 6 years, the government entities, the industry bodies have taken a view that the risk on a debit card is far lower than the risk on a credit card. And hence, why should I end up paying the same fees as a merchant or as a bank to the other bank for using or providing these services? So that's the whole idea. And I think it is coming from a slowly growing market to a more matured market from a payments perspective. Across the world today, when I go and meet different people look at India with respect because what India has done in the digital payment space is very, very commendable. And that is where my peers from the PwC network come to learn from us in terms of what is happening in India. They want to emulate similar models, especially on the faster payment side, especially on the domestic card scheme side, which they have never seen working so well with a country so big and with a population so large. So I think that's the general view and the trend that we have been seeing. I think lots is still left to be done, but it's a great start. And I think we are at the right space at the right time.
Great. Thanks. So despite the valuation that it is attracting, and despite the attention it is attracting, and you said there's a lot of attention on India, though you did touch upon it, I might as well ask you, yet payment system organizations, typically banks and fintech, seem to have an erosion of profitability. So do you think so? If that is true, if yes, what are the factors that have led to erosion in India? You did mention about MDR. Is there any other factors that have led to the erosion of profitability or commercial viability?
Sure. So I think what has happened is, as I said, the potential income that one could get from these payment products has been coming down. In certain cases, it has also become zero. So for RuPay debit cards, for UPI transactions from 1st January 2020, the merchant discount rates have become zero, which has led to the interchange becoming zero, right? So that is an issue that we still have. The other factors that I believe have led to a strain on the profitability of these businesses. So first, I will talk about it more from a bank's perspective. So from a bank's perspective, while the pricing or the income has been coming down, the costs have been same or have come or have slightly increased in certain cases. So for ATM transactions, it would have slightly increased from a cost perspective. For digital payment transactions, there is an opportunity to keep it same or even reduce it slightly. So from a bank's perspective, the costs are more or less the same where the prices come down. So that has impacted the overall profitability of that business from a bank's perspective. From a payment service provider perspective, they are, so when I say payment service provider, there are two categories again. One is the entities that provide services to banks, which are your ATM processors or your POS processors or your aggregators. And the second are the issuers of the payment instrument itself, which could be your wallet companies or which could be your third-party entities that exist in India today. So if you look at the first category, which is the processors, I would say that they are still making a little bit of money. I won't think they are in the red. They are making like positive at some level with a reasonable scale. So all the ATM processing entities, the POS processing entities are making some margin because the contracts have been negotiated and they have been understood by the banks that they need this much to provide a good quality service for the different consumers. From the second category which I mentioned, which is the issuers of wallets and other mobile instruments, they have faced a lot of erosion on their profits. The primary reason because changes in multiple factors of the regulation, the product. So for example, in prepaid wallets, they had to get a KYC done for all their customers. And if no, then they had to close that account or that wallet for that customer. So the cost of doing that KYC at that point of time was a minimum of 100 rupees per customer. And if you take that cost and you build it into the plan, then it didn't make sense for a lot of players, a sort of small players. A lot of large players which had a bullish view on the business and which had a right funding, they went ahead and did the KYC. In fact, I remember 2 years back when this rule came out from the regulator saying that KYC is essential. They said that some of the small prepaid wallet companies, which had, say, around a few lakh customers, or maybe slightly even less, they came to me and said that, can you help me find a potential buyer? And I was fortunately working with some of the banks, private sector banks, and they wanted to increase their customer base, new to bank customers rapidly. So there was a potential for them to look at such entities. So a lot of companies at that time shut shop. They surrendered licenses to RBI, which they had acquired for the prepaid business. And that is where that wave of consolidation happened. So yes, I would say that there are, in these three categories, banks have seen some erosion. Payment processing entities, ATM and POS processing entities are reasonably okay. They are still in the black, I would say. The third category, which is the issuers, direct third-party issuers like wallets and other entities, are not doing too well. So maybe barring maybe barring the top one or two. And they may be having some additional plans and not focusing only on payments, but going beyond payments to offer those services to their customers. So that's my view as of today. We'll have to see how it pans out going forward.
Absolutely, absolutely. Thank you, Mihir. That was a very well detailed explanation as to why there is a erosion of profitability. So, Mihir, in one of our talk shows, we had one guest, and he's a subject matter expert, and he said, payment organization should adopt the newspaper industry. The newspaper printing business, he said, is very expensive. Okay, they just cannot make money just by printing the newspapers and selling it to the consumers. He said, they innovate new ways of revenue. So advertisement of different size, dimension, art, color, etc. Are used to make the newspaper reading more attractive, and they get a lot more consumers, and thereby they get a lot more revenue. So it's a model that he did present, which I thought was brilliant. So in light of that, do you think, because of the erosion that we just talked about, Should payment organization adopt different models to stay viable?
No, absolutely. I think what we have been seeing and what we are witnessing today is different mindset than what it was previously. So previously, payments, especially I'm talking in the banking sector, was seen more as a cost center, where the banks had to provide these services to their customers, and it was considered to be a cost. So be it the ATM channel, be it the card, be it the point of sale terminal, that was considered to be a cost center. Slowly, the mindset started shifting and changing, and the banks started to realize that if they get additional customers, if they make the existing customers more sticky for the bank, then there is a potential to increase revenues for the bank from these customers. So from a cost mindset, it went to a revenue center mindset, where payments was seen as an opportunity to get more revenues. I'm not saying payments as a business would directly be profitable for the banks, but it's an additional revenue center, right? So the opportunity to get more revenues for the bank by ring fencing the customer, by making the customer more sticky, and by offering different banking products and services. So that is what has been happening. And when we have been speaking to banks in the last few years, they are adopting this approach where they are saying that I will look at it more as a overall life cycle or customer value chain and see that what are the components of the life cycle of his business. If he's a merchant, or if he's a customer, then if he may be having a loan need, or he may be having some other needs from a travel perspective or forex card or whatever, can I offer those and make money on those by ensuring that he's still the customer of the bank because he has my card, or he has my wallet, or because he's using my channels, right? So that has been the mindset of late. Of late means I'm saying last 3 to 4 years or 4 to 5 years that has happened. And banks have been doing that quite well, quite successfully. Now comes what is happening today and going forward.
Yeah.
Last 1 to 2 years, we have seen technology, evolving. We are seeing that data is the new oil, and data is being used to monetize and to understand different behaviors. So the first step that banks have now started doing and payment companies now are doing is understanding the data of their customers or their merchants. And when they understand the data, they have the opportunity to offer different products, primarily on lending, on other banking products, which the customer would anyways require as part of their business, and make money from there. So I think that is the way the world is going, especially in India, what is happening. And from a model where I wanted to ring fence the customer and ensure a total life cycle concept, I am now getting to a model where I am offering payment adjacencies, which are typically your lending, your other banking services. So, for example, if a customer is a trader internationally, then he may be requiring, a LC or a working capital loan or a bill discounting facility, so on and so forth. And the bank does provide that. If I'm a small merchant in a Kirana store, if I have a POS terminal of a payment entity or a bank, then I'm also offered a working capital loan for my running my day-to-day business. And that is very, very safe because the bank or the third-party entity knows that based on the past transaction data that I have, I know that this merchant is going to generate so many transaction value in a particular day. And if I multiply it by the number of days, then I have, instead of settling it with him, I can directly deduct it and keep it as part of the loan that I have given him. So there are different models that we are seeing with data driving all of these new things. And I think this is going to increase and go forward. So my view is that banks today should not see payments standalone. They should see payments plus data linked revenue opportunities, which will help to actually make money and contribute to the overall bank's balance sheet rather than seeing payments in isolation.
Excellent, Mihir. Thank you very much. So Mihir, two things happen also in this show. We do get questions put across the different channels, and I kind of take it across to you to answer those questions. Another way is that sometimes we also allow a couple of questions to come directly to you. So if you don't mind, can I ask one of the participant to ask a direct question to you?
Sure, absolutely.
Yeah, absolutely. Thank you, Mihir. So can I request Shibir to unmute, introduce yourself, please, and then ask the question. Shimir?
Yes, good afternoon, sir.
Good afternoon.
Good afternoon.
Am I audible, sir? Am I audible?
Yes, you're audible.
Yes.
Please introduce yourself.
Yes, sir. Myself Shamir. I'm a banker. Currently, I'm working in Qatar as I'm heading the branch in Gulf Exchange.
Hi, Shibir.
I was a banker in India. I worked in different banks in India.
Okay.
So I just want to ask the question regarding the cross-border payment security. How secure the cross-border payments in digital payments? Can you please explain something more about the security perspective?
Sure. So as I understand, your question is how secure are the cross-border digital payments?
Yes, that's correct.
Okay. So I think what has been happening, and I'll go a few years back of how traditional cross-border payments used to happen, specifically from Middle East, which is one of the largest contributors of international inward remittances for India. So the way it used to happen is there were two models. This is almost 10 to 15 years back, or maybe even more, where one was the money transfer operator model, where I used to walk into exchange house and I used to give them cash and they used to give me the best rate of the day and they used to transfer it to any bank account in India through their platforms. The second model was more of a unofficial model where the cash to cash transfers used to happen from the local person or contact that we had in the local country in Middle East, and the cash is to be delivered to the house or the office or wherever location in India. Going beyond that, I think what has happened is digital payments have picked up. There are different models that have come in. So one model is a bank-to-bank transfer model, where if I am sitting in, say, Qatar or any other country in the Middle East, I can actually transfer funds from my bank, which has a tie-up in India with a correspondent bank. It could be the same bank. So if Citibank is there in the UAE or in any of the countries in the Middle East, they would also be having account here. So it's a bank account to bank account transfer, which is very, very safe and secure because the bank has different protocols. There is SWIFT in between. They have the different, security standards and messaging standards. So that is fairly, comfortable, and I don't see a challenge in that. The second model that has come out from a digital remittances perspective is all these new age fintechs that have come up. So the likes of UniCredit are there, and TransferWise, if you've heard about them. What they typically do is they pool in the different transactions for a country, and based on the exchange rate fluctuation, they don't settle it on the same day. They settle it at the end of the month with their counterpart. So they have a similar counterpart in the beneficiary country. So if it's from Qatar to India, there would be a TransferWise pool in Qatar, and there would be a TransferWise pool in India. So because of that, they don't have to do everyday settlement. They can wait for the best rates, and due to that, the actual risks and all have actually come down. So from a technology perspective, also they are quite robust. They have a very, very good technology platform, and we have seen some of that. Security is not a challenge, and I think with all these new fintechs coming in, it will only support the overall remittance market going forward. So just to answer your question on both the models that are existing today, one is a banking model for digital payments, and second is a fintech model. Both are safe, both are secure, and I think both can be relied on. It's just a matter of customer adoption and how they view it as convenient.
Absolutely. Thanks, Mihir. Might as well just add that there are, I think banks are adopting a lot of, check processes inside that. Okay, checks and balances are happening. So from both sides, they kind of weigh things, and so it gets more secure. Thank you, Shamir, for asking this question. So Mihir, let's get back to our discussion on payments and commercial viability. So I observed an article in your company's PwC's website. It talked about faster payment models. Okay, it said that faster payment models must be adopted by PSPs, that is your payment system providers, for B2B, B2C, B2G kind of payments. Could you please explain to us what is faster payment models to our participants, please?
Sure. So, when we talk about faster payment models, there are 2 or 3 different things that come to our mind. The first is the immediate payment services, like how UPI and IMPS has facilitated retail payments in India, right? And that model in India focuses primarily on retail payments, and it has a cap, it has a ceiling cap, so you cannot exceed transactions beyond that. But our thought process is that why can't a faster payment system be provided to all participants, not only retail not only retail consumers? So why can't it be given to a business? Why can't it be given to a corporate? Why can't it be given to a government? There, the value of transactions is very, very high compared to what we are seeing as a cap for INTS and UPI. So that is what we are trying to do, that we are trying to understand how faster payment platforms can be used in all these different transactions, which is a corporate transaction, a B2B transaction, a government to business transaction, which will help to manage the cash flows of the corporate and the government very, very well. As you are aware, today we are in a difficult times where, due to the COVID situation, cash is the king now, and all the corporates, the banks, as well as other institutions and government want to hold on to the cash. So why can't a faster payment system be provided even to them, where they actually decide that this is the time I want to transfer the funds to the recipient, and they don't need to plan in advance, they don't need to give a file to the bank to process the transactions, and so on and so forth. Even for the value chain down the line. So if I'm a corporate like say a Reliance or any Tata or whatever, I'll be having my suppliers, I'll be having my distributors. So only once I receive the goods, based on the credit period, say if it is 30 days, 15 days, 45 days, whatever it is, I can program my faster payments platform to actually transfer the funds so that it reaches the recipient in a timely manner, not early and not late. So the advantages of faster payments outside the retail world is something which we are thinking of. And we are proposing that that should be looked at by institutions across the world. And also in India. Across the world it is happening, but in India there is still some way to go because of the cap which is being imposed. What RBI has done good in the recent past is, if you have noticed, the NEFT cycles and the RTGS anyways was a faster payment. But NEFT cycles have become a near real time, and even they have increased in terms of the processing of the batches. So it's almost real time, and now I think NEFT is also a faster payment system, which you can classify it in that sense. But my urge is that how can you use faster payments platform with very, very low fees and with direct connectivity to the banks for non-retail institutions? So that is a thought which I want to leave you back, and we'll be also coming up with some analysis shortly and trying to see how that makes sense for the corporates and the government.
So you're to sum it up, what you're saying is that this model that you're proposing, the new model that you're proposing, is more of a just-in-time, instant payment, right?
Absolutely.
It has to happen, not late, not early, but just when I want it, and it is typically for higher ticket value,
Correct.
right? Absolutely. Correct. I think that's a great thing. And so these models are available abroad, and in India, of course, NEFT is coming to that. But is there do you see any research or technology activities happening around faster payment models?
So the traditional faster payment systems across the world have the option and the ability to offer such transactions with high value options. So we are working with some of the entities in Middle East and Africa and also in Europe. And we are helping them to implement some of these faster payment platforms. And what we are recommending to them is, let it be open, don't restrict it to retail, make it, also for corporates and government. And then the business case for those payment infrastructures actually picks up. So I think we are seeing that UK has done it in some sense. Thailand has implemented their new faster payments platform 1 or 2 years back, which is also opening up not only for retail, but also for corporates. And I think that's the way to go. So, I mean, it's just a thought which I want to leave behind. And maybe NPCI and the regulators may already be evaluating that. But this is something which I believe has a huge potential and huge power to make working capital and cash easy for a lot of businesses.
Thank you, Mihir. That's a good model to look at. Okay, so let's look at, you did touch upon when we started this session about the global this thing. So let's take a global top view of payments. Give us some interesting payment models across US, Europe, and Asia, and what learnings can the local PSPs derive from these? One or two, if you can touch upon, it's good enough.
Sure. So I'll quickly, conceptually, I'll just tell you which are the payment models that exist, right? So one is a bank-led model, where banks are the big boys in a specific country and they control a lot of the payment infrastructure and payment value chains. And they make a lot of money on payments and also adjacencies from payment businesses. So countries like US, countries in Europe, some countries in the Europe, some countries in in Africa, Middle East, are where banks are the big boys and they dominate the entire financial services and payments industry. The second model that we have seen is a telco-led model, where telcos are the big boys, and there are certain very small, specific countries across the world, including Kenya, including Philippines, including Bangladesh, closer to India, where there's a telco-led operator which processes 70 to 80% of the payment volumes and transactions in that country. So that's where multiple telcos have to. In Kenya, there are 2 or 3 telcos, but obviously Safaricom is one of the largest. In the Philippines, there is GPay. In Bangladesh, there is bKash. So all these models where telco is backing them and they are leveraging on the telco subscribers. There's a pre-embedded wallet functionality, and you're capturing the consumer itself. So that's the second model. The third model, which we are seeing across the world, is more of a open banking or a fintech model, where especially in countries like Europe with PSD2 coming in, they are trying to open up the payment transaction data to these license entities. So in Europe, I believe all the big tech players have applied to be part of PSD2 and applied for a license, I think, except Apple. So be it Microsoft, be it Facebook, be it Google, be it Samsung, all of these have applied for licenses to be part of the open banking platform. Now, once I'm on that platform, I have access to customer payments data, and I can incentivize the customer with different, services, which include your rewards, which include your deals, which include, different lending products, which the customer may require at that point of time, and shift the customer from the bank to the fintechs. So these are these 3 basic models that we've seen in the world. From a pricing perspective, as I mentioned earlier, US is far profitable. From a pricing perspective, they consider payments as a standalone business and they allow that business to be made money. Europe, the margins are very thin. But we are hoping with the likes of open banking and all, and additional services that will be offered, there will be different services that will be provided to them. In other countries, from a pricing perspective, like China, it's largely dominated by 2 or 3 players. They control a lot of payment volumes, and that is what we are seeing. In other countries like India, so there is a scale of how dominant the regulator is. So is the regulator more directive or is he more prescriptive? So if the regulator is more directive, and if countries like India fall in that part of the spectrum, then they would discuss the pricing, they would define what are the rules, they would define what kind of players can participate in this. Whereas if you look at that part of the scale where, you know, a lot of Southeast Asian countries exist on the prescriptive scale, even UK, for example, is more prescriptive. They don't direct, they prescribe. So I think that is the difference which we need to say. And open market versus more of, you know, regulating the market in terms of pricing, in terms of the business, is something which has to be taken into account when we look at a global model. So that's what I wanted to kind of draw your attention, that there are different models: bank-led, telco-led, fintech-led, which is going to come up pretty soon. Pricing differs as per that model. We talked about 3 or 4 different major countries, and again, the actions of the regulator will largely prescribe as to how the pricing will work in a specific country.
Excellent. I wanted to actually draw this from you more because banks are facing some resistance from a revenue point of view because of the following fees. And I just thought whether, you know, the things that you talked about can be perhaps adopted by the banks to offset these kind of losses. And they also, you know, happen to be in the life cycle of the customer's payments. So thank you very much, Mihir, for that. So I want to talk to you about the Payments and Settlement System Act, and based on which certain fees are to be accepted or not to be accepted. But before I get into that, because that affects the margins and revenues of the PSPs, let's take another direct question, Mihir. This comes from Harish Prabhu. Harish Prabhu is a very experienced banker. So Harish, unmute yourself and ask this question.
Yeah, in fact, I have many questions to ask because Mihir is a authority, but nevertheless, I will. But you know, when you talked about the first thing about RuPay success, right? I mean, how are we measuring the success in terms of, you know, let's say a China Union Pay? And the reason why I tell you is that, you know, while a lot of RuPay cards have been issued, I mean, the activation rate could be, you know, a subset of that, and active cards would be very less. And more importantly, now, you know, the large players, large banks, you know, I don't know about the SBI and nationalized banks, but private sector banks, it's a struggle to get a debit or a credit RuPay card. So they just don't issue them. So how do you measure success? Because, you know, that's my query.
Sure. So Harish, thanks for the question. I think, I think you're right in terms of how the evolution has happened of RuPay versus other schemes. In India specifically, if you saw how RuPay started, it was targeted more for those customers or those accounts which probably didn't have a debit card or couldn't afford to give a debit card at that point of time. But I think the positioning of RuPay has slowly changed over a period of time. Today, as I go and talk to different banks, including the large private sector banks, I see a change in the way they think, in the way they are discussing about issuance of RuPay. MasterCard and Visa still are dominant, but they are now, banks are more open and willing to issue RuPay cards, not only debit cards, but also credit cards for specific segments of their customers, which they want to focus on. Yesterday, I was talking to one of the leading private sector banks, which is the largest issuer of credit cards. And the gentleman was telling me that, you know, we have a big Visa MasterCard portfolio, but we are also growing our RuPay portfolio. And that is something which, you know, we are going to do very, very focused and very, very aggressively going forward. So you're right, that perception was there where, you know, banks were not willing to issue RuPay cards for all segments of the society or all segments of the customer segment. But in the last few years, because of different initiatives, because of different products that RuPay has introduced, because of different solutions and features, I think that has changed. And in my view, it will not overtake suddenly Visa MasterCard, but it will gradually rise up, is what I feel.
So one quick caveat, you know, and my personal experience today at 12 o'clock, I lost my credit card, MasterCard, top-end credit card from a large private sector bank. I called up the bank to block the card, and I said, give me a RuPay credit card. They said, no, we can't give you. And mind you, I am the 1% higher spending guy, right? So there's something amiss somewhere. So anyway, thank you for your answer.
Yeah. No, so just to complete that question, that point which you just said right now. So banks have specific deals with Visa, MasterCard, and also RuPay, where they say that for this product category, I will only issue Visa. For this product line, I will issue MasterCard. For this product line, I will issue RuPay. So if, for example, if you that premium card is on MasterCard, then it's very difficult to get even a Visa, forget a RuPay. So it's been even my personal experience where I wanted a Visa card compared to a MasterCard maybe a few years back, almost 7-8 years back. And they did not give me because they said that this only comes with MasterCard. So that's the challenge with banks.
Thank you.
Okay.
Thanks.
Thank you, sir. So let's come back to our discussions on the payment systems and viability of that. So I'm quoting the Payments and Settlement System Act. The bank or the payment systems provider shall not impose any charges on either the payer making the payment or the beneficiary receiving the payments. This is what the Payment Settlement Act. So, let's discuss about the pricing. What are the trends in pricing of payment products? Because there is also a regulator who says don't charge. So, what are the trends in pricing of payments product? Is it left to market or is it not left to the market?
Sure. So I'll tell you what has been happening from a trend perspective. So I think if you look at the act, right, and if you look at who's a payer and a receiver, that statement which you just made is more relevant for a P2P transaction, which is a person-to-person transaction. Where if I am a wallet provider or if I'm a prepaid instrument provider of, say, for example, a Paytm, if I'm a user of Paytm, and if I transfer funds to you, which also is within of the Paytm network, and you are also a Paytm holder, then neither the sender nor the receiver, who's a beneficiary, should actually be charged, right? So that's the principle or the underlying fundamental reason why that line was added in the act. However, there are different ways to make money from a issuer perspective or a payment infrastructure perspective. So you can have a merchant rate which you charge to the merchant. You can have a cash withdrawal rate. So when I'm taking funds out of the ecosystem of Paytm or any other ecosystem, then the act does allow a charge which can be levied, which is transferred from the wallet to the bank account. So it is outside going out of the ecosystem, and hence I'm charging a charge to disincentivize the customer to do that. The merchant, if you see what has been happening in the COVID situation in the last 3-4 months, some of these wallet providers were charging very less or zero fees to the merchants for accepting their instruments. But since COVID happened, they increased that, and they are charging as high as 5% as a merchant discount rate to some of the smaller merchants. So that's the way they are playing. So what you said is more relevant from a P2P perspective, from a person to merchant, which is a merchant discount rate, or a person to account where I'm transferring funds outside of the system to a bank account, then I can still be charged.
Excellent. Yeah, thank you so much. So Mihir, let's take one more direct question. Abhinav Sharma wants to ask a question. Abhinav, please go ahead.
Hi, am I audible?
Yes.
Yeah, hi Mihir.
Hi.
I am Abhinav Sharma. I am part of HDFC Bank, and I handle a part of digital payments. So I had a couple of questions. I'll quickly go through it. One is, once we started 2 years back with the government removing the MDR or reducing the MDR, for debit cards below 2,000 rupees. While the MDR interchange was compensated to the banks for enabling small ticket transactions and debit card transactions. We understand the price is to be reduced, but we are looking at complete removal of MDR. And for a merchant wants reduction in price, but every business has to sustain. While we are looking at exponential growth for UPI, if for banks the MDR income is completely removed, how do banks prioritize it?
Yes. No, I think it's a very, very valid question. And in fact, even some of us were quite surprised by this move. I think there's a lot of discussion that has been going on since the last 1 year, and there were a lot of directives from a central government perspective, which led to the zero MDR for RuPay cards and also for UPI as a payment scheme. From a bank perspective, I think what I can say is what you need to focus on is seeing if there are any means to make money from the existing business. If you can't make money directly from MDR, what banks are now doing is they are striking deals with merchants where they're saying that I will do a same-day settlement with yourself and you give me a certain percentage because I'm crediting the money to you on the same day and you need the money, I'm helping you in your working capital, you give me a certain percentage or a certain bips as a part of that amount that I credit to you. So that is one way. The second way that banks are tying up with merchants is they are saying you don't give me MDR. Obviously, I can't charge you MDR because it's zero, but I can, for a certain threshold of transactions above which you cross, say for example on QR code, which is currently zero, you have to pay me a certain flat fee or a certain kind of markup to that. So I think banks need to think a little bit out of the box, which they've already been doing. There are different models that we are seeing right now. Two of them I just described to you. The third is offering the merchants different services and trying to make money from there, like lending, what I spoke about earlier, and other products. So I think these are 2 or 3 areas which you can think about. I agree that it's not beneficial to all the parties in the ecosystem, and I'm a strong believer saying that payments players should be allowed to make money, because only when you're allowed to make money, you will provide good quality services to all parts of the ecosystem.
Right. Thank you, Abhinav. Thank you, Mihir. That was wonderful. So, Mihir, we come back to technology piece of what is happening. So earlier we used to have a lot of payments done, whether it is brick and mortar. Later on, a lot of payments have now been moved to mobile payments, right? So people are using mobile payments on a day-to-day basis to make payments. So which is like a good thing, and it is on. Any thoughts on wearables as a payment channel or a payment media, or any other channel for payments which are new and high-tech according to you?
Sorry, what was the question? Where is the new technology going from a payments perspective?
Yeah, is wearables one of them, or is there any other media or payments that you have come across which are high-tech in nature?
Sure. So I think from a payments perspective, I think mobile is going to continue and going to be the dominant form factor in the way people use and make payments, right?
Yeah.
So tomorrow, even if I go out of my house, maybe I'll forget my wallet, maybe I'll forget something else, but I will always have my mobile with me, right? So so the underlying assumption in my view is for the next lot of years, 5 to 10 years, as for most of the use cases, mobile will still be a dominant form factor of enabling payments and doing payments. That is point number 1. Point number 2, we are seeing a lot of different technologies emerging. There is a sound-based technology. There is a wearables technology where you have it on your Fitbit or Apple Watch or whatever it is.
Yeah.
There is a new technology which is called as invisible payments. Now, what is invisible payments? It is essentially what Amazon and other entities in the US have piloted, where I can walk into a store. There are different IoT-based cameras and sensors, and my app is open of my Amazon wallet or whatever it is. And I pick up all the items and the camera sees it, and there are sensors as I exit the store, and it calculates the amount. So I don't have to pay for it. I don't have to stand in the line. I don't have to do anything. I just have to open the app. Once I walk into the store, it sees that I am the user. It takes all the information based on the items that I picked up. When I'm exiting the store, the sensors capture that, and automatically my Amazon wallet is debited. So that is invisible payment, which is going to be the future. But honestly, my view, for that to come to India, it will take at least minimum of 10 years, if not more. So the current view for the next 5 to 10 years is mobile is going to be dominant. Mobile is going to be used, and all the payment instruments will converge, and there'll be different innovations happening on that front.
Thank you. Thank you, Mihir. I think we have actually crossed our time. So we thank you very much for coming, Mihir. Ladies and gentlemen, we looked at a gamut of things today on the payment side, and why is it really eroding the profit, and what do we do about it? And I think Mihir gave an excellent view on the overview global of payments models across the globe, and in India, of course, he did touch upon factors that are eroding the profitability, and how, according to him, this can be offset because digital transactions are bound to grow. And so there is some amount of revenues that PSPs can take through. We talked about telcos and fintechs coming big time and collaborating with banks, and that's going to be a big model that will come across. We also talked about technology and different payments converging. So we have gone through many things. I have one final question, Mihir, if you don't mind. Just
Sure.
take a minute of your time. Sure. We've seen, like you said, there's so many payments, models and payment systems. In India itself, you see so many payment systems coming. So many of them. Do you think there are too many systems crowding the platform?
Yeah. So in fact, if you ask me a question, if you ask me who are the winners in the payment space today, right? I would have probably 5 names in my mind, right? 5 names in my on the top of my head, and those 5 names would be in different parts of the value chain. One would be in say an acquiring model, one would be in an online PG model, one would be in a physical aggregator model. So in my view, there are 5 or 7 companies that are really doing well, that have hit the ball out of the park, and they are actually doing well. We need to remember one thing. We need to remember that India is still emerging, experimenting, growing. It's not it's not 100% mature yet. So with that in mind, I think what RBI regulators, players have done is the right thing by allowing experimenting, by allowing innovation to happen in the country. And only once innovation happens and the dust settles down, can you actually separate the winners from the people who have not made it and are not successful, and then you focus on building those models. So I think still there is some way to go. If you may have noticed, RBI has also come up with a draft guidelines on new umbrella entity, which will again provide that spurt of innovation, which is entities like NPCI, which they want to give licenses to and provide the payment rails and infrastructure. So I think there's a lot to be done still. I think India is a very diverse country with different customer segments and different needs from a population perspective. What the rural person may require is very different from what I sitting in Mumbai may require, right? So that is something which we need to keep in mind and allow that little bit of flexibility, innovation. And when the dust settles down, like how it has done in, say, PPI, where a lot of consolidation has happened, licenses have been surrendered to RBI, I think we will find out the real winners, is what my view is.
Thank you, Mihir. I would like to close, but if I would seek your indulgence, Mihir, just one more question, because we don't want to disappoint our participants. Yeah, he has tweeted twice. So could you please take his question? Mr. Alok Priyam, please ask a quick question. Unmute yourself and ask quickly to Mihir. Alok? Alok, you're there? Okay. Maybe it's some issue, Mihir. I'm so sorry about it. Thank you, Mihir. Thanks for coming. It was wonderful talking to you. I've already summarized so many things we have touched upon, and they are absolutely informative. And we would like to have you once more, because there is so much to talk with you and so much to learn from you. So we would seek your once again request you to come over, and we'll talk to you. Thank you so much for coming.
Thank you so much for the opportunity. I think it was a great discussion. Thanks a lot.
Thank you.
Thank you. Bye.
Bye-bye.
बोल नाही तू घे हो ठीक आहे चालू
तू ट्रान्सफर केले का?